Mehraboon, good morning. It's a pleasure talking to you. You're always known for, buying names that are undiscovered, buying names that people don't know about. But in such a market, for a conservative investor like you, is it very difficult to find ideas because everything is just going up?
I think what the market is giving a thumbs up to are companies in which earnings are expected to trend upward. I agree with you that in quite a few cases, especially in mid caps and small caps, somewhere valuations have become extremely expensive. But there is liquidity. People are holding shares, at least quite a few of them, which have become expensive, are still not selling them. And people are just getting carried away by the way the stocks are moving in one direction. So people are taking some risk somewhere in some pockets by buying stocks which have become valuation-wise expensive. But on the whole, I feel that the markets remain on a very positive trend. If you go back some months ago, Pankaj, I think there was a time when, sometime in the month of May, people were hoping that we have a good monsoon. Then people were hoping that Governor Rajan's exit should not be dirty, market should not come down because Governor Rajan was supposed to be one of the better governors, RBI governors that India has ever had. Then people were saying Brexit should not happen. Then people were saying GST should happen. Now look at what has happened. Monsoon has been super. GST has come. Rajan's exit has not created any sort of problem for the markets. And Brexit has happened, digested well as of now. Inflation largely under control. Currency largely, I would say, relatively stable or relatively strong, I would say, whether the dollar as compared to other currencies. Everything is boding well for India. Macros wise, number one. I don't think macros have been so positive for India as what they were over the last 20 years. So it is so good. Now people are still remaining skeptical, saying that markets are expensive, this, earnings are not catching up. My dear friend, earnings are based on what has happened. But going ahead, if you believe, I certainly believe, that earnings upgrades will be more than the downgrades, I think that will be the single largest positive trigger for the markets. The fact is, somewhere I feel people are feeling better. In being skeptical, they are indirectly stating that we are feeling stupid, that we have not been able to participate in the rally that the markets are given post-February. But at the end of it all, earnings upgrades going to happen, macros on good ground. I think we are still trending upward. Definitely, yes, you may say, Pankaj, that is the market not knowing what I have stated, most of the things? Answer is yes. So are they not in the prices? Answer is yes. To a large extent, they would be in the prices. But still, if you believe that earnings will keep pace going ahead, I think the direction should be on the upside. Global factors notwithstanding. I think we have US elections coming, and then we have a possible Fed hike at last happening in the month of December. Will that create problems for the markets here and there? Could happen. I'm not bothered too much about the US elections, if you ask me, because I believe the money in the US is still on the side. So I believe US markets are yet to go up, and post-election, whosoever comes in power, ultimately US markets will go up. The problem, US Fed hike, will it take money out of the emerging markets, including India? It could happen. So at no point of time I'm saying the markets cannot fall by 200, 300, 400, 500 points on the Nifty, but I believe we are going to be higher than where we are over the next few months.
Right. So, some of the names, and, we'll just put out your top picks. But just wanted to clarify, Dalmia Bharat, this is a name which I think you had recommended around 400 a few years back. Now it's around 1600. So you still like the name, or you would want to be, a buyer into Dalmia Bharat?
I think Dalmia Bharat at 350, 400, yes, I had mentioned it on your channel about a year and a half ago, or less than a year and a half ago, and today it's 1900 rupees. And I believe that this is a stock which should be at least 2300 rupees over the next 1 or 2 quarters. It's a clear case of operational leverage company with a capacity of 23 million tons, operating at just 11 million tons right now. So if we believe that the demand offtake will improve and demand prices will also possibly go up, 11 million ton, even if it becomes a 14, 15, 16 million ton, the earnings can only improve because most of the fixed costs are in place. So that is the simple trigger which I like for this stock, and I believe with an earnings of over 100 rupees expected in 2017-18, market will be able to defend a valuation of around 23, 24 times.
But would you want to buy now, or is it a hold if you have and the earnings trajectory would be positive?
Clear disclosure, personally holding it, family holding it, clients holding it, and one more disclosure. I bought the stock this morning again for some new clients at 1880.
Right. So you continue to be positive. Is it the overall cement pack? Any other cement picks that you have?
I like another company called OCL India, which is again a Dalmia Group company. And if you look at the parameters over here, I think OCL should be at least 50% higher than where it is. Because the Almia is 1900, there should be at least a 1100, 1200 rupees stock. And I don't have any inside information on this, but it's simple logic that over the next 6 months to 1 year, it is distinctly possible both these companies will get merged. And if that happens, I think OCL could score faster gains as compared to the Almia Bharat. So at 850, 860 rupees, OCL is a buy? Certainly yes.
Right. You also like brokerage names like Edelweiss, some of the others. Any particular reason to be bullish on brokerage names? Because brokerage prices have not yet gone up.
I would say that if you look at the numbers of the brokerage companies, again, if you are a believer that Indian markets will grow because Indian economy will grow, which I strongly believe, I think you need to have one brokerage stock in your portfolio. It's a different issue, Pankaj. You may say Motilal Oswal, you will prefer, somebody will say India Info, somebody will pick up a dark horse like JM Financial, and I'm going with Edelweiss. So it's a question, pick up any of them. But if I'm given a choice, my preference would be, I would say that Edelweiss at number 1, followed by India Info, Motilal and JM Financial.
Right. See, there's no doubt that volumes in our markets would go up and markets would probably do well over a period of few years from now. Recently, we've seen a lot of foreign brokerages which had tried to give competition, actually shut down. MNC brokers that we talk to are, not having that great time that they had in 2006, 7, 8. Is that the reason why domestic brokerage would do well, or they know how to do business in India and that's why they will grow?
I would actually like to agree with the last part, but I will not. But I will say one thing, that foreign brokerage houses, whenever they set up shop, they come up and concentrate on 1 or 2 segments. Institutional broking, is it very lucrative today? The answer would be no. But along with institutional broking, if you are into other segments, related segments like investment banking, or you are into, say, retail broking type of thing, I believe that money is going to continue to flow and there is going to be no shortage. The tap is going to continue to flow money out. People are still getting more and more enthused and believing more and more in this present government and the reforms which are happening and expecting that things will continue like that for the next 2 or 3 years. Accidents not getting ruled out though, interim accidents here and there. So I believe this industry is going to grow, as simple as that. And referring to your question, indirectly you're asking Pankaj and directly I'm answering now. I think money is going to flow more and more into equity. Depends on whatever route it comes, whether it's mutual fund route, whether it's people putting in more money, retail investors directly, giving money to advisory firms like us. Well, that's a different issue. But I believe that looking at the way other asset classes are behaving and expected to behave, I believe that more and more percentage of asset allocation will be going towards equity in the years ahead.
Right. Another interesting company that you've pointed out is Cosmo Films. Now, this is again a company which has done phenomenally well from the lows. What's the call over here? How are you looking at earnings to go from here on?
Again, a clear disclosure that we are very bullish on the entire packaging sector. Cosmo Films and another company called Maltech Packaging virtually stand out. Portfolios, personal portfolios, family portfolios, client portfolios, no intention to sell this stock. And Cosmo is another stock which we have bought this morning, again for a fresh client at 388. We are expecting earnings to be over 50 rupees for this company in the current year. Give and take 3-4 rupees here and there. And we believe this company in the packaging film segment, possibly in terms of product profile, has a distinct edge over other players in the sector. Without naming them, I would like to say. Number 2, I had an interaction with the management quite a few months ago. And I am quite convinced that the management is very focused. Earnings, will it go up further? Answer is certainly yes. Because again over here the same logic functions. If you believe Indian economy is going to grow, consumption is going to pick up, I think the demand for packaging films should only pick up. And I don't see too much of capacity coming up at least for the next 3 or 4 quarters. So I think the going is going to be good for companies like Cosmo Films, maybe a Jindal, maybe a Uflex. They will also do Jindal Poly. Maybe they will also do well. But again over here, like the broking houses, you need to pick up one company and I pick up Cosmo.
We've seen these companies doing well earlier as well. But how sustainable would be that 50 rupee number? Is it very volatile?
Your point is brilliant, Pankaj. I think you are talking about what happened some years ago. There was suddenly an increase in capacity which happened. There was also a slowdown which happened simultaneously, and all of them were having capacities and not a sustainable market size. But as of now, Therefore, I mentioned earlier that I don't see the supply picking up too much. I don't see too much of fresh capacity coming over the next 2, 3, 4 quarters. And I see demand continuing to be good. Also, there is something called an oil price, which has an impact on these companies, which gets passed on. So I don't see any problem for these companies for the next 2, 3 quarters, and I won't like to take a call on this company or any company in this sector for the reasons which you rightly pointed out for the next 2, 3, 4 years, because I really can't predict, and neither can the management predict as to what the company will be doing 2, 3, 4 years later, because the scenario, God forbid, can change for them. But as of now, the going is good. As of now, I'm not giving it a valuation of more than possibly 8, 9 times. And I'm saying a 50 can become a 65 next year. At 65, if I'm giving it a valuation of just 8 times the earnings, I see a price of around 550 rupees for the stock.
As far as packaging industry is concerned, would they benefit from the boom in e-commerce, or that's completely different?
I don't think it's completely different. Certainly, yes, it will have an impact. Also, we will need to see and we need to understand what will be the impact of GST on the packaging sector. But as far as clear packaging goes, as far as clear containers goes, I think I would like to rank one company, South-based company, on a high, and that is Maltech Packaging. That is very different. That is not in packaging film. That is doing very well. Again, valuations very attractive and continue to do well with some more orders they are expected to get. So I think all this is official public knowledge. So Maltech Packaging, after touching 220, now coming down to around 195, 200 rupees is a stock which I believe has an upside of at least 25% from here over the next 2, 3 quarters.
Right. Another sector that actually you've been tracking for a while has been the auto ancillary sector. And clearly, most of the companies have done well after autos with a lag effect. Still any picks into those sector? Any names that you like or you would want to buy if there is any correction?
I think it's unbelievable returns most of the stocks again, Pankaj. You said it 100% correctly. But there is a company called Lumax Autotech. Around 440, 430, 450 is the price. I think if you expect this company to grow at 20-25%, I think the earnings this year should be around 32 to 33 rupees. At 33 rupees current year and maybe around 40 rupees next year, this stock is still available at least 30-40% cheaper than what other auto ancillary companies are now trading at. So I feel this is a simple, clear-cut arithmetic case of a price of around 600 to 650 coming for the stock over the next 2-3 quarters, because 32-33 rupees current year earnings I think is certainly on the cards, and a possible 40 rupees coming next year. So at 40 rupees, even if you give it a valuation of just 15 times, as I was others which are quoting at 20-25 times now, I mean this is a 600 rupees stock. Clear disclosure again, personally holding it, family holding it, clients holding it.
As far as auto ancillary is concerned, it continues to be in a sweet spot space even now?
It certainly is, but in the auto ancillary also there are various types of companies. There are companies like you can call tire companies also an auto ancillary, you can call a company making gears also, shafts also, chassis also. So there are various types of companies over here, but yes, they are on a roll. There is replacement demand as well as the overall sale of vehicles also is much better than what it was say a year ago. Again over here I would like to say the same thing to the very first question which you asked. I think market knows it and market has already started discounting it. If one starts arguing, have they not become very expensive, you will not be able to defend it. The fact is, most of the stocks have already become very expensive, but since the direction is positive, people are just going on putting money, going on buying into them. People are not realizing that they are giving a very high price for them. So at such times, I think sanity needs to prevail and you need to buy stocks which are relatively cheaper, and therefore I singled out Lumax Autotech.
Right, Mehraboon, thank you so much for taking out time for us. That was some top picks coming in from Mehraboon Irani of Nirmal Bang.